After widening deficits and increasing domestic issuance in most markets in recent years, the emphasis is slowly turning our way towards more fiscal consolidation and cautious domestic debt management in Africa. This is the view of Delphine Arrighi. She's Senior Rates Strategist for Africa in the Global Research Department at Standard Chartered out in London. She joins us now live from our studios in London. Delphine, good evening. I think it's good afternoon for you, a wintry afternoon I hear by all accounts.
Good evening.
Let's look at the African fiscal picture. When you look at African governments' fiscal balances and the kind of challenges that we dealt with in 2011, when you look at 2012, what kind of a picture do you see emerging? Are we likely to be seeing more governments coming onto the markets and borrowing, and at what rates?
Well, I think we have to differentiate from one market to the other. What we've seen over the recent years was obviously fiscal slippage in a lot of countries, especially in Kenya, for example, Nigeria. But I think that the emphasis this year is for government to try to adopt a more conservative approach, try to rein in their domestic finances, and definitely from their side a strong will to sort of rein in domestic debt issuance.
Yeah. Now, when you look at the African continent and you're looking at it from a foreign investor perspective, which markets would you be advising investors to look at in terms of returns and, of course, stability?
Well, we think that the conditions that we've seen last year, mostly surging inflation, extremely tight monetary policy in East Africa, in Kenya and Uganda, have led to extremely attractive investment opportunities nowadays. Those two markets are now seeing yields that have rocketed to historical highs and above, and are now embarking on slightly looser monetary policy because of inflation expected to come down quite sharply this year. So all of this and fiscal consolidation is sort of helping to give a better picture on those markets.
Yeah, but at the same time, we're also seeing in those markets, you note in your report that was issued out today, that we are seeing a drop in issuance in those two markets, particularly Uganda and Kenya.
Yes, Uganda historically have relied in a very limited fashion to domestic debt to finance its budget deficit, and that's the approach that they want to maintain again this year. In the case of Kenya, they are faced with extremely difficult fiscal pressures, but the announcement that they are now trying to complete a $600 million US loan with international banks should definitely help alleviate the pressure on the local domestic debt.
Yeah. When you look across the whole of the African continent, are you seeing more African governments coming onto international markets to try and raise funds? And perhaps if they are, would like to discuss just what kind of prices they are paying?
Well, I think most of those countries are now trying to reduce their domestic debt issuance, but there's still a lot to be financed, and a lot of this will be financed domestically. When we look at Uganda and Kenya, for example, where we've seen yields surging to extremely high levels, around 20%, pretty much across the curve. But the good thing now is that those levels are seen as extremely attractive from by the offshore investors community, and we would expect those yields to come down quite drastically in the next month or so.
Yeah, now of course the two biggest economies in Africa are South Africa and Nigeria. Give us a picture of what you see there.
Well, we think in the case of both Nigeria and South Africa, there's again a will to move towards fiscal consolidation, but in both cases the budget assumptions are quite optimistic. In the case of Nigeria, for example, relatively high oil output that the country might not be able to meet. And in the case of South Africa, where its GDP growth is heavily linked to its exports to the Eurozone,
yeah.
We think that risks are for GDP growth to be revised downwards, and hence the fiscal deficits to come out wider than expected.
Yeah, and the kind of demand that you see?
Demand from offshore investors is still extremely strong, especially in South Africa. We've seen strong inflows as well in Uganda, and we expect those inflows to reach other markets like Kenya.
Yeah.
In the case of Nigeria, we think that near term we still see a bit of uncertainties, but more in terms of a longer-term outlook, we think that Nigeria will also be a good recipient of offshore investors' flows.
Yeah. Now, of course, the factor of investing in Africa is the issue of currency risk. How big an issue is it when you look across the performance of African currencies that we saw in 2011?
Well, obviously, most of the African currencies have been hardly hit in the 2011 crisis. Mostly East African currencies, again, on the back of surging inflation and extremely high import bills that sort of weigh on the currency as well. We've now seen both East African currencies in the name of Kenya and Uganda rallying quite strongly since the beginning of the year, partly because of tightening measures by the central banks, but also in the case of Uganda, thanks to offshore portfolio inflows. That is the case as well in South Africa, and we expect that trend to continue.